This year has really got to be about capital flows. We've really got to get money flowing to the companies that need it most and that will power economic growth across the regions. We have this pension review going on. How can we get UK pensions behind UK assets? Because currently it feels like they've turned their back on their own market. And we want to get that money invested back in the UK. It's fine to back Nvidia, that's absolutely fine, but we've also got to back our own world-beating companies. And I think there's a better balance to be struck.
Hello everyone, and welcome to the latest episode of Conversations with Leaders. I am Sam North, and today we are joined by the CEO of Quoted Companies Alliance, James Ashton. James is also an author of the Evergreen Blueprint, a non-executive director, amongst other things as well. James, it's a pleasure to have you on. How are you?
Yeah, great. Thanks, Sam. Good to see you.
Yeah, it's great to have you with us. Where are you logging in from today? You in the UK?
Yeah, absolutely. I'm in the office, not far from Smithfield Market, so very close to the city, and a lot of our members are around here, so it's a great place to be.
Fantastic. Well, before we get into the QCA, how do you feel about London at the moment in the UK? It's getting back to what it was. I see skyscrapers every time I go into the city. Are you feeling there's the buzz again?
Well, London's never finished, is it? There's always some building work and things going on. But yeah, look, it's it's great to have a base here and work here. And I really hope in 2025 that London is appreciated, across the UK. I think there was a time when it was, we still must level up. We must level up. And I'm from Huddersfield. We must get great jobs and great opportunities all over the UK, but we mustn't do that at the expense of this brilliant capital city that we operate from.
I completely agree. Okay, for those that don't know about the Quoted Companies Alliance, then James, can you give us a quick overview?
Yeah, we're a members body, a trade association. We champion public equity. We particularly represent the mid-cap and small-cap companies that are listed on London's markets. And AIM is our heartland. We're also growing very strongly on the main market and Aquis. And our corporate members have market caps of between 2 million and 2 billion. And we represent them with regulators, with government, and sometimes in the media, and to try and get a better deal for them, to ensure that the markets are working as best as they possibly can for these companies based all over the UK that want to commercialise and grow and export and recruit.
Amazing. And what does your sort of day-to-day as CEO look like at the moment?
What I do in an average day?
Yeah.
Is that the... I think it's a whole mix of things. I think I need to make sure I'm speaking to a member every day for a start. If we aren't functioning properly unless we are reflecting what our members, who are the companies, and also a third of our members are the advisors, many of them in the city, so accountants, lawyers, registrars, investors, the whole support network for these companies. We need to make sure that our ear is to the ground. And then I think it's a balance of all of our strands of work. As I look forward into 2025 now, have we got the great events in place where our members can network together, meet each other, be meeting with regulators and politicians and so on? Have we got the policy responses in train if there's a big piece of work on pensions review or something? Are we doing the research that highlights the challenges that our companies have got? And am I in the media and doing podcasts enough? I suppose it's a kind of a mix of all of those things.
Well, it's great to have you on this podcast. You mentioned earlier, well, just then, talking to a member a day. So do you feel like you've got quite a good finger on the pulse on what they're thinking, what others are thinking about the UK right now? Are you feeling positive? Are they feeling positive?
Yeah, I would hope we have a finger on the pulse. I mean, I wake up every day and think about the QCA. We have to be relevant. We have to really make sure that we're working on our relevancy, which is our our connectedness with with government, with regulators like the FCA and the FRC, and with companies. And how do companies feel? we're trying to work really hard. We did a bit of it at the back end of 2024, and its real focus for 2025 is to champion these companies and see if we can get a better deal with them when they're trading on the market and they're looking to raise capital. But we've also got to celebrate them. And if I just talk for a second, I mean, we have got sometimes these companies aren't brought to life, and that's really something I want to do. So within our membership, we've got fintechs in Huddersfield, we've got material science in Cumbria, we've got digital media in Glasgow, green energy in Wiltshire, and it's a really, people say, what's an average member? And really there isn't one, by size or by stage of development. They're across geographies and they're across industries. I think what they have got in common is these companies, whether CEO led or founder led, they're indefatigable. They really, really believe in what they're doing, whether it's that fintech or it's someone working on a cancer vaccine in Oxford. So I think that the best CEOs will seek to lead and to strive their best for these companies, regardless of the external conditions. And we're there hopefully to help them along and give them that voice with government and others. So I think there's a positivity if you think that we have stable government. There's a big majority. We're not going through some of the turmoils that have been seen recently in mainland Europe. I think a lot of members hope for more in the budget last autumn. But we know this government are putting some long-term building blocks in place, and we have to keep pushing and reminding those in power of the huge value of the UK's capital markets to the broader economy.
100%. Do you think speaking of politics and all of that jazz, did the US election influence things a lot, or is it kind of just a bit of noise in the background?
No, I think it affects it affects everyone around the world. I mean, I think the one thing you get with Trump is America first. We know about the trend of the Magnificent Seven, and it's interesting. Even though there's talk about tariffs and what he might do, with some workers and immigrant workers and so on. The markets only believe that a Trump presidency is very, very positive. And, that's really interesting. And it's they will have America first. We need to we can do this through the lens of the capital markets. We've really got to think about what UK first looks like. And I think that will be something I'd really hope our leaders focus on this year.
Yeah, I mean, the markets in general in the last sort of 6 weeks or so, 7 weeks, 8 weeks since the US election have done well. Especially risk appetite seems to be there as we close in on the year and start a new year. Speaking of 2025, are there any trends that you're seeing at the moment?
I think trends. Well, I mean, look. A lot of the conversation around trends on capital markets will, what we talk about, what we left behind in 2024. The de-equitization is there. Companies are departing. We saw some, early signs of IPOs coming back. I mean, Raspberry Pi was a great success for the UK last year. Applied Nutrition is another. And I think we just need more of those. It lifts everything. It lifts the advisors, sentiment and confidence and so on. But I think it also lifts those of the companies that are already on the market, because you want those that are like you to be trading their shares also. So I hope that is one trend we can turn around. And there's a lot of talk about companies that are thinking about, can they list, can they come onto AIM or Aquis or the main market when there is that period of stability. I think something like the jobs tax, the increased company contribution on national insurance, has actually rocked quite a number of companies back on their heels, even to the extent that those that might have IPO'd are having just another think about it. But we've got to hope 25 is more positive than 24. And I really hope we've seen this journey on capital market reform. Last year we saw things like changes to the listing rules for the main market. This year has really got to be about capital flows. We've really got to get money flowing to the companies that need it most and that will power economic growth across the regions. We have this pension review going on. How can we get UK pensions behind UK assets? Because currently it feels like they've turned their back on their own market. Which is a very strange thing when you look at what's happening in Canada, Australia, and other places. So we're really encouraged that Emma Reynolds, the pensions minister, is looking closely at that. And we want to get that money invested back in the UK. It's fine to back Nvidia, that's absolutely fine, but we've also got to back our own world-beating companies. And I think there's a better balance to be struck. So that's one area of work that we're really focused on, and there are others.
Of course. I was just researching you earlier, and you joined QCA October 2022 as the CEO. And for anyone involved in markets, 2022 was a pretty tough year, right? I mean, equities were down literally until October 2022 in November. So was that the best possible time to join, or was it actually quite tough because the previous 10 months of that year had been really difficult? And is it night and day compared to now?
Yeah, I suppose. Look, obviously, I'm very conscious of the market, and I'm probably more conscious of how those individual stocks are faring. But I'm not a fund manager. I'm not incentivized like a fund manager.
Yeah.
And so I can't be. Lots of things come to my door, but how the AIM All Share or the FTSE All Share has performed is not one of them, Sam. I think it's confidence. It's about the trajectory of markets and showing the evidence that there's a broad alliance of people who are affecting positive change, so that we do have a capital market that will support the UK economy generation from now.
Yeah, absolutely. What would you say the biggest challenges then to the UK capital markets in 2025? What are those that really need to be addressed for us to see real good growth?
I think if we could see, as I say, if we can get the capital flowing, that the pensions review is hugely important. The Mansion House Compact is something that where a number of signatories committed to putting 5% of their default DC funds into unlisted equities. Now that includes AIM and Aquis, those growth stocks. That's a scheme that hasn't really paid off yet. It's had a very slow start. We'd love to see that moving forward. We'd love to see the British Business Bank turning its attention to public companies as well as private. And then there are bigger pieces as well. I mean, we talked, in the last year there was talk of a UK ISA, and that was unfortunately killed in summer. We still think there's you might grandly call it a retail investment strategy. How can we get UK savers, UK individuals behind stocks here in the same way that they get behind stocks in the US? So this is a difficult one. You can't legislate for changing the culture, but what you can do is make sure that the regulators are supportive of appropriate risk. I mean, currently, it's far easier to put your money into crypto than it is into shares. I believe you look at the marketing across the piece. There's a great piece of work. I say great piece of work. Sorry, I'm sounding like a regulatory nerd for a second. The FCA is looking at the advice guidance boundary. So how can individuals get better advice on saving for a pension, on putting their money into shares and so on. And currently, we've kind of got a system where everyone's too frightened to say anything or do anything, and it should be the most natural thing in the world for someone to invest in a great company they see down across town, invest in their workplace. We have 2 million people in the UK who are in workplace share saving schemes. Why not 4 million? Why not 6 million? Particularly when you have this issue of war for talent tight labor market. How do you engender loyalty? Well, you encourage people to buy discounted shares in their company. They have skin in the game. You grow with them. So, sorry, you've got me into some of the issues. We haven't even mentioned stamp duty yet, Sam.
Let's go for it then. Stamp
duty. Well, I mean, that's the big one. We have, other than Ireland, we have the highest rate of stamp duty on share dealing anywhere in the world. People who are in the UK will be taxed on buying shares in UK stocks, but not foreign ones. And it's this, you have this similar odd setup whereby you can invest through an ISA and you get a tax break if you buy shares at Nvidia. I mean, Jensen Huang doesn't need that, but we're giving it him regardless. That's very kind of us. But let's focus back on the UK.
Yeah. When you mentioned Bitcoin earlier, it could be a quick question, could be a long question for the answer. Are you a fan of it? Do you like it? Do you love it? No interest? I mean, retail investors love it.
Yeah. Look, and I don't know enough about it, so I've not got money in there. And I think, look, that's got to be that's absolutely a choice if that's what people want to do. I would say one of the things that goes through so much of our work is proportionality. We want to make sure that a small company does not have the same regulatory demands as a large company. That's how companies grow. That's how you bring founder-led companies, exciting companies to the market. I think with something like crypto versus equities, that's somewhere where you need a level playing field. And I think, as I said, look, it seems to me that the FCA are only really now getting around to regulating crypto. And I'm not saying let's put a damp towel over everything and calm the passions. I'm just saying let's have a level playing field. Crypto shares, you should be able to market them in the same way. You should be able to the risk landscape should be the same. And I think we're kind of a bit we're very excited by what's new. But I think that's fine, but it shouldn't be we shouldn't penalise what's been around a little bit longer.
For sure. Well, speaking about the UK, are you worried that some businesses might look to take their business elsewhere? I mean, there's, talk of, like you mentioned, the stamp duty and capital gains tax and all of these things. Is there part of you that thinks this is a real big issue and a potential for businesses and individuals to go abroad, to take their business abroad, or do you think that's a little bit overstated?
No, well, look, I mean, it's not overstated. It is happening. You can see it happening, and I think there are two dynamics, Sam. I mean, one of them is, take a company like, ARM Holdings, the chip designer. ARM didn't list when it relisted, didn't come to London, went to New York. So there's this kind of like mega cap, large cap, competition. Companies are mobile, capital is mobile. So why London or New York or Amsterdam? And I think that's a really important thing. I suppose where the QCA plays is much more the public versus private. And that's another area where we need to level the playing field. We need to level up listed, level up quoted, if you like. So I think we're holding our public companies to such a high standard versus private companies. And we need to, for the reasons of companies operating transparently, sourcing growth capital and distributing well through their shares. There's lots to like about companies that are public as opposed to private when they're operating behind something of a veil of secrecy. So I think it's really important to make sure that they can see all of the upside to being public. But we know they will go overseas. I think actually, when we're talking about growth capital and scale ups and so on, as soon as a company, too many UK companies have to go abroad for capital to grow too soon. And the sooner you do that, the sooner I think there's the potential that your roots loosen in the soil. And, so if you take money from the US, then maybe a non-exec comes on board from the US at the same time, and then when it's time to IPO, they might say, we quite like Nasdaq. So look, this is not the Little Englander response, but I think it's being able to fund and satisfy all these brilliant ideas that we know are coming out of universities or wherever else all around the UK. I give Arm as an example, if I can, and you touched on it at the start, and of course, I wrote the book, The Everything Blueprint, which focuses on the story of Arm, set up in 1990 in Cambridge. So Arm spent, Arm spent 18 years on the stock market. It IPO'd in April 98. It actually made it into the FTSE at the end of 99. So about 25 years ago, it made it into the FTSE for the first time. It had grown like a top in 18 months. The fact that company spent 18 years on the UK stock market, I think, is one of the main reasons that even though it's listed on Nasdaq today, even though its senior management is based on the west coast of the States, it still has its largest base in Cambridge, 3,000 highly qualified, highly paid jobs. And that's testament to it not having to loosen those roots in the early years of its development. So we're always saying, how do we build that NVIDIA? How do we build that Google? We've got Arm here. At least we've got the guts of Arm here, if you like, if you can have the guts of an Arm. And we need to work really hard to keep these ideas, keep the jobs, and actually keep the tax in the UK, or else we do risk becoming a branch economy.
Yeah, for sure. I mean, it's a UK success story, Arm, and actually it's pretty heavily invested on eToro by our retail audience. Last sort of question about the UK before we talk a little bit about the book and other stuff that you do. Let's say, James, you're in a room with the genie from Aladdin. He gives you 3 wishes about the UK, things that you could change, things that you would love to see that are really going to help us prosper. What would your conversation go like?
Oh, Genie. Well, I mean, the Chancellor would do, but the Genie would be fine as well. I think it's going back to what it's really grasping some of these difficult nettles. So whether we have to mandate UK pensions to get behind UK equities, or actually the government directly invests, it could reinvest some of the cash it's still got in NatWest into the UK. I think the biggest signal we could send out internationally that we are really serious about the UK capital markets for the future would be the scrapping of stamp duty. Huge. It would pay itself back in spades. And then I think there's something that we should do for the nation. It's about that retail investment strategy, about getting people excited and educated and having the confidence to back companies that are down the street for them, that are in the next town or whatever. So there's 3. I've made it to 3.
Yeah, well, I think that third one is so important, isn't it? Like, that is just a game changer if that can properly happen for the country. And I guess, education in that point is so important. Do you think it is changing, that we are educating the country a little bit better, or are we still way behind where we need to be right now? Do you think there are improvements happening?
Yeah, I think on the retail side, there is a missing piece there that is, we can gather. The last government had talked about that share offer of NatWest last summer. Was that? Well, it feels like 5 years ago. And I think that as a catalyst, it's not quite tell Sid, but I think it's. I say we need someone like Martin Lewis for equities. Maybe that's you, I don't know. And someone who can talk about that excitement. So, and I think it's kind of reconnecting. So, if you enjoy Greg's pasties, if you love the Warhammer figurines, then why aren't you buying shares in Games Workshop or Greg's. I mean, those sorts of connections, if you like, and actually a lot of the most senior fund managers, they only invest in stuff they understand and stuff they like the taste of.
Well, I always say when we do our sessions with our retail audience, for a lot of people that come to them, these sessions, these webinars, these seminars, these podcasts, whatever it is, they're completely new to investing. And the way to sort of get the brain sparks flying about are, what is your niche? What do you love? And if it is Greg's, well, have a look at the share price because it's gone insanely higher. If it is sport, there are so many different sporting companies that you could potentially look at, and you're going to know more if it's your niche than the average analyst would anyway. So there really is a route down for these people,
and we must say, look, there are. I mean, there is still, more than 10% of the UK market is in retail hands, and actually, I think a lot of these large companies can learn from smaller companies. So if we look at AIM, 24% is in retail hands, including founders. And we know where some smaller companies have struggled with institutions because institutions have taken a very careful view on risk. That actually the institutions might not be in the small cap anymore. And so these companies have made a virtue out of cultivating retail. And they have a really close relationship with their shareholder base who will support them through fundraisings and so on. But it's it's for a number of them, a number of our members, it's a real exercise in very strong investor relations.
Yeah, come on the UK, let's go. Right, James, let's talk about the book. You've written it, and you see Sir James Dyson does a review, and he goes, a gripping and inspiring read. I mean, this must have set your heart racing a little bit. What a person to review the book.
Well, yeah, it was very nice of him to say that, and he was sort of one of a handful who I really hope would get it, because. I mean, it's, a number of people have said, well, why did you pick ARM to write about? And I've done a few books before. And I think with this one, I was looking around for what is the ultimate UK corporate success of the last generation, the last 50 years or whatever. And we've got a lot of very, very historic companies on the market or in private hands, and of course Dyson is a relatively recent success over a number of decades as opposed to hundreds of years. And I thought ARM, I brutally wanted to sell some books as well, Sam. So it had to be high tech, it had to work in the States, and it had to have a good cast of characters or list of associated brands. And I think ARM, which, if it's worth explaining, ARM is a very, very modern company. It doesn't actually make anything. It has an architecture. It licenses its designs, which effectively provide the floor plan for some incredibly complicated machines. These tiny, tiny chips that have got billions and billions of transistors packed on them, and thanks to Moore's law, have sort of gained in ability year on year. And so ARM's designs, I mean, effectively, it's the language of modern computing. Its designs it licenses them, so it's a royalty system, and they're licensed 1,000 times a second, 30 billion times a year. They are in. They'll be in your smartphone. They'll probably be in your car, quite possibly your fridge if you have a fancy fridge, Sam. Your toothbrush. What's happened over the last number of decades is that there are more smart devices, and there are more chips per smart device. And ARM is likely to be in them. It's in, as I say, cars. It's in data centers, and it's a very, very power efficient design, which means when you have a huge warehouse full of data servers that threatens to collapse the local energy grid, it is the ARM designs that mean hopefully you can do more with less. And so the company is fascinating. Came out of Acorn computers in the 80s and was established in 1990. And just to mention very briefly on those relationships, Apple was there at the start in a joint venture with Acorn. It's still there now as a cornerstone customer. There's also Nokia, the first flushers of the mobile revolution. It was ARM that really meant that you no longer had to carry your Nokia in one hand and a large sort of swag bag full of your battery in the other. And it has a key relationship with Amazon, producing the Graviton chip, which is in all the Amazon Web Services data centers, and lots of others. So it was great fun to write, even more fun to finish, and nice to talk about now.
Yeah, I bet. I mean, just on ARM, just having a look at the share price just while you were talking there, it's up 120% over the last year. So it must be doing something right, you would imagine.
I mean, it's astonishing, and it is, because there was very much part of that roadshow. What would it be now? Almost 18 months ago, they were really selling the merits of AI. We are an AI company, and of course, the type of processor they were involved in is kind of the CPU, which is the brains of the outfit, but actually it's the GPU. It's those graphics chips that NVIDIA specialize in that have really taken off because of AI. But it all gets plugged in together, and ARM has ridden that wave.
You mentioned earlier about the companies that you deal with. There's not like one size fits all. There's ones from all different sectors and backgrounds. But if there was a massive similarity with them all, would AI be that one? Is that just such a buzzword right now, or not necessarily?
No, I don't think so. I think obviously there are those companies that are trying to be the picks and shovels of the AI revolution, and you count ARM with them. But I think for a typical QCA member, they would be sussing out how it works, how it can be used, and so on. I think what unites them is the quote. They see value in using the public market, and I think they all want to grow. I think that's the ambition. So it's kind of across, as I say, across sectors and across geographies, and it's great when we can bring them together with each other, because being the boss, being the CFO can be quite a lonely existence. So if we have dinners when these execs gather together, they almost don't need us. They need us to convene, but it's good for them to be able to swap ideas and say, well, our auditor said this, or this is how we're hiring, or whatever.
Fantastic. James, we'll wrap it there for today. It's been a pleasure to have you on. I'm feeling a lot more bullish about the UK than I was 32 and a half minutes ago. So thank you very much. You've convinced me to be positive. James, thank you.
Thanks, Sam. Thanks so much.